Let's face it, when interest rates hit rock bottom, your community's hard-earned reserves barely grow while maintenance costs keep climbing. Every board meeting becomes a reminder of this frustrating reality, but there are smarter ways to handle your reserves, even when the rate environment isn't in your favor. First things first, know what options are actually available to you. Your state has specific requirements that determine what you can and can't do with reserve funds. Talk to your community management company and legal counsel to understand these regulations. What worked for your neighbor's association might not work for yours, and what was permitted 5 years ago might have changed. Rules evolve, and your investment strategy needs to stay aligned with current regulations. When interest rates are low, consider CD laddering, essentially staggering maturity dates across multiple CDs. This gives you regular access to your funds while positioning you to take advantage when rates start climbing again. For some portion of your reserves, you might look at slightly longer maturities if your cash flow allows. Just remember, in low rate environments, protecting your principal takes priority over chasing a slightly higher yield. When rates are higher, you can take advantage by investing in higher yielding CDs and treasury securities. You might want to shorten some CD maturities so you can reinvest as even better rates become available, and always keep inflation in mind. Your returns need to maintain purchasing power for those future repairs and replacements. Don't waste time trying to predict what the market will do next. Instead, keep it practical. Use your reserve study as your roadmap for timing. It tells you when you'll need funds for scheduled projects. Your community management company and bank can give you straightforward guidance about current rates and typical investment options that make sense for associations. Your typical options include high-yield savings accounts, government-backed money market funds, certificates of deposit, and treasury bills. Each offers different trade-offs between safety, liquidity, and yield. Here's something many boards overlook: FDIC insurance limits. Remember, FDIC coverage only protects up to $250,000 per depositor per bank. If your association has substantial reserves beyond this limit, you'll want to spread funds across multiple FDIC insured institutions. Having multiple accounts at the same bank won't increase your coverage. It's your association's taxpayer ID that matters here. For larger associations with significant reserves, ask your bank about services like Certificate of Deposit Account Registry Service, better known by the acronym CDARS, which can automatically distribute your funds across multiple institutions while maintaining full FDIC coverage. Yes, managing multiple banking relationships adds some complexity, but the additional protection is absolutely worth it if you're responsible for substantial community funds. Put together a simple written investment policy for your association. Document your approach to safety, liquidity, and yield, including the laddering strategy and how you'll handle FDIC insurance limits. If your reserves exceed $250,000, clearly spell out your strategies for spreading funds across multiple institutions. Schedule an annual meeting with your community management company and banking representatives to review your options and current rates. Keep detailed records for future board members. This creates consistency even as board membership changes. Remember, as volunteers with fiduciary responsibilities, you're not trying to become investment gurus or beat the market. Your job is to protect your community's funds while ensuring they're available when needed for crucial repairs and replacements. A straightforward, consistent approach will serve your community far better than chasing yields or trying to time the market. If you found this perspective valuable, we invite you to connect with us. Facebook viewers, like our page and follow us for regular updates. Feel free to message us directly with your questions or community challenges. Instagram viewers, hit follow and feel free to DM us with your questions or community challenges. YouTube viewers, subscribe to our channel and check out the video description for helpful links. Visit our website to discover our thought leadership content, books, and resources that can transform your community management approach. Whether you're dealing with the challenges we discussed today or other community issues, we're here to help. Thanks for watching, and we'll see you in the next video.